is the PKF Texas Entrepreneur's Playbook. I'm Jen Lemanski, and I'm here once again with Frank Landreneau, one of the Approachable Advisors and the leader of our international tax practice. Frank, welcome back to the Playbook.
Thanks for having me, Jen.
So we've talked about a number of, international tax things over the years, and one that I'd like to know a little bit more about is the global intangible low taxed income. What is it, and how does it impact middle market companies?
That's a great question. And actually, I had this come up with a client of mine fairly recently. So it is a topic that taxpayers, even many years after tax reform, are still grappling with. Mm-hmm. It's a fancy word that really is misleading because basically what has happened after tax reform is that there isn't any deferral with regard to foreign active business income anymore, with the exception of a little bit of a haircut it's formulaic, and I'm not going to go into that. But basically, the whole idea behind all this was to broaden the tax base mm-hmm. and then lower the rate. However, some of the rate lowering pieces of it didn't really apply to individuals or companies doing business as individuals, like pass-through entities, like partnerships and so forth. What it really is the ability to pick up this income, or the requirement to pick up this income, where before tax reform that wasn't required. So it's not really special type of income. It's normally trade or active business income that gets taxed. Now for corporations, it gets taxed at about a 10.5%.
Okay.
But because individuals don't get special provisions like mm-hmm. the deduction that gets the rate to 10.5%, they get taxed at a normal ordinary income rate.
So what are some potential remedies to this situation?
So there's a couple of them that are elections that you can make every year, mm-hmm. depending on what the fact pattern is, and there's also some structural ones. The structural ones are more difficult because they involve taxable transactions, or transactions that you're going to pay some kind of income tax.
Sure.
But the others are elections. So the elections, one is the GILTI high tax exception. The idea is that if you're paying a tax that overseas on mm-hmm. this foreign income, that's at a rate at least 90% of the U.S. corporate rate, which gets you to about 18.9% mm-hmm. rate, and you got to compute it under U.S. tax principles. Then that income is not taxed and it can be excluded from the GILTI computation. So
okay.
that's one of the options. The other one is a 962 election, which we can go into a little later, mm-hmm. and then the other one is to restructure, and we can talk about that more.
Perfect.
It involves elections, but it involves a taxable event.
And when do folks make these elections?
Typically, they make them annually on an extended return. So you can kind of see how, mm-hmm. Get your books and records in order, close the year, and then you can kind of make that election on an extended return as far out into the year as far as October.
Okay. Typically. Okay, perfect. Well, sounds like we got a couple more things to talk about next time. Sound good?
Thank you. Yes, I'd love to be back.
Awesome. This has been another Thought Leader production brought to you by PKF Texas, the Entrepreneur's Playbook. For more information about this and other topics, visit pkftexas.com/insights. Tune in next week for another chapter.